Hi and welcome to Top Tips Tuesday. Jeff here again from GCD Property. So this week's tip is for those property investors considering buying their next or purchasing their next investment property and concerned about the interest rate rises. It's a really big elephant in the room at the moment, and I know a lot of people are not sure which way to go, whether to proceed with the property or to wait, concerned about income and cash flow. So this week's tip is all about helping those clients understand and seeing how we overcome that and going forward to making a decision on an investment property. So if we look at history, which is a bit of an indication, a bit of a guide what's happened in previous property cycles and previous times in the market when we've had interest rate rises, just because interest rate rises have risen doesn't mean that property prices have fallen. So if you go back to our last rate rises around that 2010, 2011, so some people would have sat on the fence and held off, but at that time a lot of the Australian property market was giving great returns. So those people that didn't make a decision actually missed out on that growth over those next few years. So even with interest rate rising, those properties were still increasing in value. And then if you take it back a step further, I remember buying properties in the 90s, interest rates are up around that 18 to 20%, which was hugely high. Hard to imagine now, but however, considering those high interest rates, property prices were still rising. So property prices aren't only related to interest rate rises, there's a lot of other factors. It comes really down to supply and demand. So when we're looking at the next investment property or making a decision whether to hold our current properties, we really need to understand the cash flow, very important. So how do we overcome these rate rises? As we know, with the forecast and the bank's indications, there is going to be further rises over the next couple of years, which is pretty much a given. So we need to protect ourselves from those rate rises. So how do we do that? So what I've personally done, I've invested in these higher cash flow type yielding properties. So I've got more of a margin, more of a ceiling there. So even if the property interest rate rises, it means my property is still cash flow positive. So if you're interested in those higher cash flow properties, we're actually coming to Sydney this Saturday, the 25th of June, to have a live event. So we're going to cover the topics such as the income, the cash flow, the yield, how to calculate that. And then we're going to indicate and show you some of these higher type yielding properties, which are giving you that more income, which is going to help protect you against the interest rate rises. So if you'd like to find out what's happening in the market in Southeast Queensland and understand interest rates and high cash flow type properties, love you to join us. So it's this Saturday, the 25th of June at Ridges, Parramatta at 2 p.m. So there will be a link around the page we can click on and register. Please register, we'll get your details, we can provide catering, etc. We're also going to be down there for a few days in Sydney to see our clients. Really excited about coming down. It's been a while since with COVID and travelling and everything, and we're going to be covering what's happening in the Queensland, Southeast Queensland property market, as well as these high cash flow properties. So thanks for watching. See you next Tuesday.